Good morning, everybody. We finally made it. It's the last show of 2025. You join myself and Michael for the ultimate market podcast roundup, whatever you want to call it, the morning blast, where hopefully we add a bit of value to your day. We should definitely put a smile on your face. Or you're laughing with us or at us is unbeknownst to me, and probably laughing at me today at the state I'm in. As usual, this is recorded live. Apologies for the trigger word. Actually, no, I'm not sorry for the trigger words. Deal with it. This is recorded live. There's no editing, so apologies for people that say shit, fuck, or bugger. Nothing we say is trading or investment advice. Nothing we say is an endorsement unless we make it very clear. Michael, how are you?
A very good morning to you, Ryan. Good morning, everyone, and a very happy Friday. I am in a joyous mood. It is the last proper trading day of the year. I have to speak to you, and then I've got another podcast to record, and then I am done for 2025.
Are you? Oh, God. Sorry, one sec.
Are you alive?
Are you in the office for the final proper?
Do you know what? I am. I am in the office indeed, which means one thing, as you well know.
I'll see you for a pint later.
After a lunch. Oh, God.
Oh, God. I need a Mary stat.
Well, while you go sort that out, shall I crack on? Because obviously Clive has already taken off for Christmas, hasn't he?
Quite literally, he's going to Australia.
Indeed he is. Hopefully he's not going to see the cricket because that is all over at this point. But the less said about that, the better. Anyway, as for markets yesterday, I won't give you any technical analysis because I don't know anything about it. But I can tell you that it was a risk-on day across the board, with the S&P closing up by about 0.8%, and Nasdaq rallying by around 1.5%. And we also saw some decent gains in Europe as well. In fact, the Stock 600 in Europe trading to new record highs yesterday. Of course, that came amid a bonanza of G10 central bank decisions. Just to run through those very, very quickly. The Riksbank holding rates steady at 1.75% as expected. The Norges Bank also standing pat at 4% as expected, and repeating their guidance that the rates or the cash rate will be cut further in the course of the coming year. Bank of England also delivering on market expectations for a 25 basis point cut, lowering bank rates to 3.75% in line with expectations, although that did come via the narrowest possible 5-4 vote, with Governor Andrew Bailey joining the Dubs to get that cut forced through.
Has Rachel Reeves claimed credit for cutting interest rates and claiming that's a sign of a good economy, a strong economy?
Yes, she has, and our friend Tris Osborne has also claimed credit for the fact that interest rates are falling at their fastest pace in 17 years. Yes, because the last time they fell that much was the fucking financial crisis, you muppet.
This Tris Osborne, I've been blocked by him, by the way, because I called him some naughty words.
You surely not.
Yeah, but this is the thing, like the illiteracy of the government, because I genuinely think they believe this is a good thing.
Yeah, and it isn't, for those who are unaware.
You cut rate. The central banks cut rates when they need to kind of try and to prop up the economy, basically. Get cash flowing. That's like when you cut it down to brass tacks. That's kind of very much kind of using me crayons to explain what they do.
So effectively things are shit and we need to make them less shit, so we're going to lower the cost of credit to do so.
And then you've got Labour politicians claiming that cutting is a good sign of they're doing the right thing. I'm like, what are you doing with your life?
Bizarre. In any case, the MPC did repeat their prior guidance that rates are now on a gradual downwards path, although they did note that judgments on further easing are likely to become what they described a closer call. Now, I'm not quite sure how it can be a closer call than 5-4, but there we are. It's the Bank of England. Let's not try and overthink it. Moving on from that, the ECB, they stood pat at 2% as expected, repeating that they're going to take a data-dependent and meeting-by-meeting approach to future decisions while not pre-committing to a particular policy path. They upgraded their near-term economic growth expectations. They also nudged higher the 2026 inflation forecast and penciled in inflation returning to the 2% target in 2028. Lagarde's press conference was incredibly dull, apart from two things. The first was that she repeated that the ECB is in a good place, which is the language that she's been using for some time to indicate a prolonged pause. And the second was that my doppelganger, the German journalist, not only was he there, but he also got given the chance to ask a question, which he made a complete and utter pig's ear of. But the less said about that, the better. No one really knows, to be honest. In fact, President Lagarde didn't know because she had to ask him to repeat it and then just answered something completely different. So,
quite a funky brooch, though.
Yeah, she also had a tea towel over her shoulder, which was a bit weird. And of course, I posted that on Twitter and then got people saying I'm a misogynist. No, it just looked like she had a tea towel there.
I've got one cream for that.
Oh, God. We did have some sources stories later on via Bloomberg noting that ECB officials said that the cutting cycle is most likely over, which is very much in line with expectations. And then, of course, overnight, we had a 25 basis point hike from the Bank of Japan, raising the policy rate to 0.75%, which is, of course, a 30-year high, which quite frankly says everything you need to know. Their guidance was unchanged, noting that they will continue to raise rates if the economy and prices evolve in line with their forecasts. Of course, we've also had quite a lot of economic data over the last 24 hours or so. CPI out of the States yesterday, much softer than expected, 2.7% on a headline level on a year-on-year basis, down from the 3% we saw in September. Core CPI at 2.6% in November, also down from the 3% we had in September. Couple of issues with this, though. Of course, the BLS, they did not collect any October data due to the government shutdown. So they effectively had to guess where prices were during the month of October. One of the things that they did, sure, there's an academic reason for this, is they assumed that rent inflation was at 0 in October. Clearly, that would not have been the case, and that has likely had an impact on skewing the numbers lower, because we know shelter is a big component of the inflation basket. The other thing to bear in mind is that when the BLS reopened, they ended up collecting all of their price data in the second half of November, after about the 14th of the month. That means that they were collecting price data around all of the Black Friday, Cyber Monday, holiday discounting, which again will probably have skewed things lower. I think this is one of those releases where you kind of look at it and you go, there's something wrong with that. Whatever it is, first glance, that just is not right. I think the Fed will probably look through it, unless, of course, we get a similar print in December, in which case you can actually say, well, maybe this is now a trend. But certainly no one overreacting to that yesterday. I think it was very telling that the reaction we saw in both the equity and the treasury complex was pretty much non-existent to that data. So market participants kind of ignoring things. We also had the latest jobless claims stats out of the States. Initial claims at 224,000 in the week of the 13th of December. That's down from the prior 236. Of course, that does coincide with the December non-farm payroll survey week. And just to round out the economic data, this morning we have had the latest retail sales figures from here in the UK. Headline sales fell by 0.1% on the month in November. That was much worse than the 0.3% increase that had been penciled in. Excluding fuel, sales were down by 0.2%. Again, much worse than the 0.1% increase that been penciled in. Shouldn't really be too surprising, given that November was clouded by pre-budget uncertainty, but nonetheless the consumer not in a particularly good way as we moved into the winter months. Away from economic data, a few other headlines I'll just rattle off relatively quickly. On the trade front, we heard from the US Trade Representative Jameson Greer yesterday talking about the EU, saying that they need to engage with the EU and deal with it quickly. This is around digital services taxes and all the fines that the EU keep lobbing around left, right and centre. And actually sticking with the EU, Germany is planning to sell 512 billion euros worth of debt in 2026. That is a record amount of German debt sales. It is an absolutely huge number. And I think this is important because 2026, we are going to see a hell of a lot of debt issuance. Obviously, Germany, €500 billion. The UK is selling 300 odd billion quid's worth. The Treasury in the US, God only knows how much they're going to have to sell, particularly if they need to refund tariffs. Obviously, issuance in Japan as well on the back of the budget that Takaichi announced recently. So, yeah, a lot of supply coming into the market next year. It's going to be interesting to see how that is absorbed and what it does to yield. I'll give you a hint, it ain't going to make them go down very much. Moving on from that, couple of stories regarding President Trump. The first is that this sort of real-life version of The Apprentice when it comes to the Fed chair race, well, we had been down to one candidate 3 weeks ago. Apparently, he's now talking to 3 or 4 Fed chair candidates. He said during a media appearance yesterday that he thinks Chris Waller is great. He thinks Michelle Bowman is great. She seems to be back in the running, potentially. And he also said that he'll be making a decision very quickly. Of course, Trump has previously touted that an announcement on that front will come next year. year. So that is certainly one to watch. Sticking with Trump in possibly the weirdest headline I've read this year, sneaking in right at the death: Trump Media and Technology Group to merge with TAE Technologies. Now, I didn't know who they were. They are a nuclear fusion power company. So what we've got here is an all-stock deal worth about $6 billion between a social media network and a company building nuclear power stations. Now, if I was a betting man, I'd probably go and put money on some executive orders being signed around the nuclear industry in the relatively near future, because otherwise that deal does not make any sense whatsoever. Sticking in the equity space, Pershing Square. This is, of course, Bill Ackman's vehicle. They're going to throw $1 billion into Howard Hughes preferred stock. This is one to watch over the very long term. But basically, Bill Ackman is trying to turn Howard Hughes into basically his version of Berkshire Hathaway and trying to become, a bit of a Warren Buffett type character. So we'll see how he manages with that one.
With this, I was reading a post, I can't remember if it was a post or a blog or whatever it was, regarding Bill and his vision. His long-term vision is literally to be building cities using the Howard Hughes vehicle.
Yes.
And you see how that goes.
An ambitious fella.
Yeah, expect a very long Twitter post on it.
Oh, yeah. Hopefully Zach can summarize that. Yeah. Moving on from that, a couple of other things lastly from me. Citadel, of course, the hedge fund, they are going to open an office in Dubai in 2026. So good news for all the Essex folk who want to be moving out there. And last but by no means least, NVIDIA. They have announced that their RTX Pro 5072 GB Blackwell GPU is now generally available. So if anyone wants to get us one of those for Christmas, then feel free. We'd like them to work out what the hell you do with it.
I've got to say, that's my favourite.
Well, actually, do you know what? I've always preferred, to be honest, the NVIDIA RTX Pro 5073 GB Blackwell GPU. But beggars can't be choosers.
Well, quite.
But that is all from me. Wonderful. Have you got an overnight news roundup? Can you read it?
I have. I'll try and read. Let me close one eye so I can focus, because I'm a bit... shout out to all the kite broking people that I was out with last night. Anyway, right, moving on. The overnight news roundup, courtesy of our dear friend Zach. Again, follow Zach on Twitter and do subscribe to our Substack, yada, yada, yada. There's a lot of headlines that get given to you in that. I just choose the easy ones to read, and I still balls that up most days. Where are we? TikTok, they signed a deal to stay in America. Finally, TikTok have signed an agreement to create a US joint venture under a deal brokered by Trump. ByteDance will form a JV with Oracle, Silver Lake and Abu Dhabi's MGX, but keeps direct control of core operations. OpenAI, again, me and Michael were saying yesterday, it feels like they just feel the need to be in the papers every day with billion-dollar deals, just so people keep looking at the next thing that's coming along. People kind of, as soon as they stop, like a shark swimming, they'll die. They are aiming to raise as much as $100 billion in a round that could value the company at $830 billion. The startup wants to close the deal by the end of Q1, but it's unclear if there's enough investor demand. Trump, he signs a law to block US investment in Chinese tech. This apparently he signed the most significant effort yet to police how American capital flows into Chinese tech firms, bolstering tech firms that bolster Beijing's military and surveillance capabilities. China called it overstretching national security. Nike, their turnaround stumbles and shares have dropped 10%. Nike made some progress on its turnaround, but expects sales to decline further again this quarter as weakness in China continues. Shares fell 9%. The swoosh still has a long way to go.
Oh, dear. Zach.
No, that was me, to be fair.
Oh, well, fair play for coming up with that in your state.
Thank you. China boosts. Thank you very much. China is boosting AI chip output by upgrading older ASML machines that were supposed to be restricted. The workaround is exposing cracks in US-led export controls. Trump directed the government to reclassify cannabis as a less dangerous drug, boosting the legal marijuana industry, but doesn't legalize weed federally or fix the banking problems companies were hoping for. So a bit of a halfway house there. FedEx, they posted high revenue on increased...
Did they deliver?
Oh, they did. Increased US package shipments that raised the bottom end of the full-year outlook. The shipping giant is navigating global trade changes better than expected. Wells Fargo, they jumped to 7th place from 14th in the US M&A league table, its highest ranking ever. The CEO's strategic push has added more than 90 managing directors to the investment bank. ANZ, the Australian bank, will pay its largest combined penalties ever secured by Australian corporate regulator over risk failures and misconduct, including the handling of a $9.26 billion government bond sale. Moving to Japan now, Japan's core consumer prices rose 3% in November, staying way above the BOJ's 2% target for the 44th straight month. Rate hikes are well timed. South Korean central bank and the government took more measures to ease pressures on the won after an unscheduled board meeting.
Won to watch, Nick.
Boy, the currency is Asia's worst performer this year. Moving to UK, well, actually, you want to cover the retail sales. What are you laughing at?
I've just got a WhatsApp from someone who'll remain nameless, but they're probably pocketing some brown onions at this point that read, quote, "Ryan's fucked."
I am. Toyota will start selling US-made Camry, Highlander and Tundra vehicles in Japan next year, a move that will help improve trade relations with Washington. And that's it from me.
Yeah, I think it's probably best if we do leave it there. Right, well, while Ryan dies and hopefully does that quietly, I'll tell you what's going on today. We do have a relatively light data docket through the European morning, although do bear in mind we are... Oh, excuse me, it's catching. We are going to get plenty of ECB speakers, as is typical in the aftermath of a policy decision. We're due to hear from Wunsch, Kosher, Wren, Simke, Slipen, Casimir, and probably a whole host of others, although all of them are likely to basically say that they're data dependent and not in a rush to do anything else. In terms of economic releases today, at 1:30 this afternoon, we get the October retail sales figures out of Canada. Sales expected to have held steady in October compared to the 0.7% decline that they put in September. And then at 3:00 this afternoon, we get November existing home sales out of the States, seen at 4.15 million, up from a prior 4.1 million. And we also get the preliminary read on consumer sentiment from the University of Michigan. That is expected at 53.5 in December, up from a prior 53.3. And of course, today is the last proper trading day of the year, if the year is not over already. So firstly, do be very, very careful if you are mental and have some sort of weird desire to trade. Conditions could be absolutely all over the place. But secondly, it is, of course, our last show of the year. So I just want to say thank you, of course, to Ryan for, well, I was going to say able sidekick, but I may have to revise that on this morning's performance. Thank you, of course, to Clive, Zach and Tom, if he can crawl out from under the bus we've thrown him under for their help with this throughout the year. And of course, a big thanks to all you guys for listening. You know, it has been a hell of a year, but it has been bloody good fun to try and break it all down. And of course, we would not be doing this if you weren't listening and showing us your support, which we very, very much appreciate. So from me, it's a very Merry Christmas to you all, a Happy New Year, and we'll do it all again in 2026.
Well, what else is there left for me to say? Not a lot. Thank you, Michael Brown, for doing all the hard work for me.
I'm used to it now.
But to echo what Michael said, absolutely. Thank you to everyone. And we definitely do wish you all a very, very Merry Christmas. Do yourself a favour, get flat, enjoy Christmas, enjoy the new year, come back and smash 2026, basically. But yeah.
Indeed.
I'll be down.
We'll be back on the 5th of Jan, I assume.
I believe so. Oh, shout out to Peter Paxton, who's just messaged on the live chat. Unfortunately, he wasn't able to attend last night. He was dearly missed. But anyway, Michael, I'll see you later on for a beer.
Indeed.
And if anyone wants to buy me a beer, you know where I'll be.
From about 8 a.m.
Yeah.